for financing, Show Me the Money. Josh, want to have a seat? Josh is the general partner of Rubicon Venture Capital here in New York. And Josh, I'll let you introduce the panelists. Pär-Jörgen, Viney, and Kathyrn. I believe we are missing Jane. Is Jane here yet?
Jane will be joining us at 2 o'clock. She's just a little
delayed.
delayed.
Stuck in traffic. Ah, okay.
And she's here. Okay.
She made it. All right, very good. Great. Okay, Josh.
So good afternoon. Thank you everyone for joining us and
just in time
with us for this panel. We're going to be discussing a lot of the areas surrounding the raising of capital, financing, and how to look at companies that are raising capital. Each of us here on the panel has experience both on the professional side of writing checks into startups from other people's money as well as our own money. So I'm going to ask each of the panelists to just take 15 to 20 seconds to introduce themselves, their current position, so that you can get a feel for everyone up on stage real quick. So PJ, you'd start.
Yeah. Do we have a functioning mic? Yeah, we do. I live here in New York since about a year, but I've been in venture capital for close to 20 years. And with Northzone, we are one of the 3 largest funds coming out of Europe, and we are excited to be here in New York.
Vinay?
25 years in investment banking. Currently oversee a boutique investment firm specializing in the energy sector. I also do some teaching in Boston in private equity and investment banking and project finance.
Kathyrn, Swintek, 20 years in investment banking, 4 years in early stage investing. My firm is the 2nd largest angel investment network in the United States, and we've backed about 70 companies and invested about $64 million over the 10 years of our existence. I'm also a managing partner of a separate venture capital fund, Golden Seeds Fund 2.
And I'm Jane Walerud, the late one. Over the last 15 years, I've co-founded a couple of tech companies. I've invested and been very active, like 1 day a week in a couple, 3 more, and been board member in a couple, 3 more, and like that. And of those 15 companies that I've invested in, I've had an annual rate of return of a little over 55%. And 5 of them are world-class companies, 4 are growing, and 3 went really badly. All of them, pretty much all of them in Sweden.
Excellent. And I'm Joshua Siegel. I run Rubicon Venture Capital, and we invest in early-stage disruptive technology companies, primarily here in the United States, but we can invest anywhere in the world. So I know that there's a lot of interest regarding how to raise venture capital and angel funding, and we have a pretty diverse panel here that can give us perspectives from both those sides. So I'd like each panelist to comment on that. And I'd like to work from Jane's side first up to what would be the institutional money at this end of the panel as to what are the top 3 things that an entrepreneur or a team of entrepreneurs can do that will entice you to write a check to them, to fund them.
Right, so the first thing is it shouldn't be an entrepreneur. I invest in teams and not in single people. Okay? It has to be somebody that I believe can actually make an idea into reality. I tend to invest well before it's a reality, as in an idea, not even incorporated. Okay? So a team, 3, 4 people, dedicated, healthy, energetic, intelligent, answer questions on their feet. That's important, all of that. And then the idea, it's nice if it's good and if it's nice in my area. In order to actually talk to me, you probably need to go through a friend of mine.
Kathyrn?
We're Series A investors, so there will always, by definition, be a team. We don't do seed. We back growth, so there must be a proven concept. I would say the top 3 things One, a team, and particularly a leader of that team, who's willing to go through 10 or 20 or 30 or 100 brick walls. It just has to be. You know, you just need to feel the passion of that team, because this stuff is hard. There's a lot of things that happen that, you know, you couldn't plan for, couldn't foresee. You have to really want, you know, to go the distance. The other thing is people who know what they don't know. So self-awareness is very important. People willing to take counsel. You know, we don't want to run the company, but, you know, we know what we know. Other advisors know what they know. You want a team that, you know, wants to take that input. And the third thing is, you know, having something that we haven't seen before, you know, and that doesn't look like the 20 or 100 things that are already out there, which means that, you know, had I been in the business when Facebook came along, yes, I probably would have said no, because there was MySpace and Friendster at the time. So it's tough, you know, I mean, but generally something that's really different.
Exceptional management team is key, fire in the belly, scalability, size of the market, sustainable competitive advantage, and the project should pass an acid test that it's a painkiller and not just a vitamin.
Yeah, I would say, because I agree with what all the previous speakers said, but I think the core thing is, you know, some animal magnetism. You know, that the founder team has something that is just irresistible to everyone, you know, to prospective employees, to suppliers, to, you know, they have the capacity to just make something out of nothing. And because that is really the thing. You know, the money is very seldom the decisive element, although it sometimes is extremely important, but it's never the decisive element. It's actually the capacity to sort of convince people that this almost impossible task is absolutely essential. You know, we have Jonas here sitting on the front row, who I was fortunate to back at 2 different occasions, and in both those occasions, it was like he did something that was just impossible. And so the same with Daniel and Martin at Spotify. You know, they went after a market that was, everybody saw that was the stupidest idea you could ever do, to sort of try to make money out of piracy. Isn't that the worst idea you've ever had? You know, and they heard that so many times, but they were capable of attracting the best coders in Stockholm. They were, you know, every VC were flying in just to meet them, but then they trickled off because they were sort of chickening out on the risk. But they had a capacity to get people to the table, and that is unique, and that's what I'm looking for, this sort of star quality.
So, PJ, you touched on something interesting, which is, you know, startups that make money or have a revenue model, and startups that use VC funding as their revenue model and are just looking to scale. So how important is it for each of you to look at a company from the standpoint of, does it have to make money right away, or can it take the time to try to figure out a revenue model later, once they've, you know, taken some VC capital, sort of massaged it, learned, and gone from there? You know, how do you view that? I
don't think I've ever invested in a company that actually has pursued the revenue model that I originally invested in. So it's that is the bitter reality, and that's why I need guys like Jonas, because he will figure it out. I can't figure it out, but he will. Whether I should let them sort of try or not try, it's the wrong question. It's like, I am privileged to be a part of that journey, and they can gauge that journey a lot better than I can ever do. So if it takes 2 years, before you even try to monetize in order to build scale, because the characteristics of that particular market, then that's the way to do it. And if you do it any other way, you're just fooling yourself. You're sort of having this idea that it's, which always pisses me off so much when everybody says, yeah, when will Spotify start to make money? As if that is the key determinant of success when you're growing like 150% per year.
Viney?
Virality factor. If a product has a viral effect, take Facebook, for many, many years they had no revenues. All that they had were hits. People were visiting the Facebook site. They were signing up, 0 revenues. And that virality factor, I think, is key today in the minds of most VCs, because they know that if this thing is capable of returning their entire fund, one transaction, and they're always looking for that one transaction which has the capability and the potential of returning their entire fund. So revenues, I think, can be figured out, but the key thing is does it have this virality factor in place or not? I think that's probably all that I can say.
We invest in biotech and other life sciences, so obviously those names do not have revenue for quite some time, so we are investing in R&D. But for all the other deals, we do have a tendency to look at revenues. I would say that if we're looking at eyeballs, which are very, very strong investment themes as well, and deals that work out very well, then the team also needs to look very closely at the burn. So, we're talking about the ramen noodle diet for some time as opposed to, the Four Seasons.
Right, and I'm going to be a little different here. And that is that I think that almost all companies don't need venture capital. Okay?
Mm-hmm.
They really don't. And in order to survive without venture capital, you need either an awful lot of money yourself, or you need customers to pay you. And a fair number of the companies that I've invested in, some of the most successful ones, have had very little venture capital in, and still we've sold them for hundreds of millions of dollars. Okay? So I believe in customers actually thinking whatever you do is important enough that they'll actually pay you for it. Okay? That doesn't mean that I believe that a company has to be profitable from the first as a whole, but I do believe in a profit margin. So that Lensway, for example, on every sale of lenses over the net, they made 30, 40, 50%. Over time it grew. They just kept on growing by 20% a month, and it's hard to keep the amount of money in the company when you're growing 20% a month. That, I think, is a reasonable, yes, then you need venture capital, or then you need bank loans, or then you need some other way of financing, but I am also interested in companies that don't have to go the VC route and be worth $10 billion. I think that companies that we sell or that become very profitable and at $100 or $200 million, that's just fine. That's great. So I think that in the same way Klarna, which is turning into a multi-billion-dollar company, every transaction there is profitable. It's just that has to be so many of them to cover the incredibly fast expansion that then you need to be financed.
So the good news is for the entrepreneurs that are out there, you don't have to have everything figured out right away. We still understand that revenue can be a challenge. But from an institutional standpoint, finding the unicorns, the billion-dollar-plus valuation companies, is an important element of what we do. And that's how we are judged and compensated on the professional side of things. So to find those type of companies from the institutional side and then going into sort of the acquisition targets down the line, what characteristics do you see that you really have to see in a company to identify it as a unicorn?
Yeah, that's it. there are pretty much the same characteristics as we just talked about with these founder characteristics. But then, in terms of what markets they are addressing and how they are addressing it, it is typically a combination of a business model innovation and some sort of technology superiority. And superiority doesn't have to be significant, it hasn't to be a big invention, it has nothing to do with patents or anything, but it's something that sort of makes it hard for someone else to instantaneously just make the same thing. But the combination of this different approach, this different solution, and a new business model is, that's we've been fortunate to back 4 unicorns so far, billion-dollar plus companies, and we've had maybe 20 or so several $100 million companies, and the difference between those 4 and the other ones is pretty much this, that they have had the capacity to be both innovative from a technology and a market definition standpoint, and really create something that is sort of, instead of taking the definitions of a market and accepting those definitions, they say that this is the market definition. We decide, and we're going to make this market definition work our way with this business model. And if they get acceptance for that, that's how you create massive value. Because we've also, throughout the years, concluded that if you are the leader in a specific segment, you get about 90% of the value creation in that segment. If you are sort of ranked number 2, 3, or 4 in a given segment, you will have to share the spoils, like the rest, the 10% or so, and that clearly doesn't cut it for us as VCs with our high cost and high failure rate. Mind you that we actually lose everything on about 40% of our deals. So that's the other side of the equation. It's easy to talk about all these nice unicorns, but we have actually spent a lot of money and a lot of time in supporting stuff that never got off the ground.
Alibaba was formed in 1999 by a school teacher by the name of Jack Ma. In 2005, Yahoo decided to invest $1 billion into that firm because Jack Ma was addressing the Chinese market. Did Yahoo identify a unicorn? Hopefully so. And that company, Alibaba, was listed here in the United States only a couple of weeks ago, and their current market valuation is in excess of $230 billion. Was it the size of the market? Is it Jack Ma's execution team? Is it luck? Is it his ability to copycat Amazon, eBay, all put together? You don't know. Is it the 32-man team that he has? It's all put together. But I think, at the end of the day, if I was to pick on one item, I would say size of the market probably would be my favorite. I think size of the market, the Chinese market, basically did it for Jack Ma.
Yeah, well said, Viney. We would be looking more at deep science as the unicorn. So we have a few companies that are in some very, very big areas of pharma that are looking very good, and where, to Viney's point, the market would be huge if the science continues to perform. So we would be looking more at the patents and the deep science for our unicorns.
Well, I like the idea of barriers to entry, okay, which Pär-Jörgen was talking about. Since I'm also more into deep tech than into business to consumer, I think that patents are really not a bad thing to have, or some kind of development which is hard to duplicate somehow. That said, there are other barriers to entry which can be exploited and built up, and they're probably better that way. I also listened to somebody that said that product development is sexy, but process development will give you a whole lot more money. And looking back at my career, that's the mistake I keep on making. I say, ooh, what a wonderful product. Oh, that's just great. I want to work with that product, and not think about the ones that are actually doing the process difference. And if you look at a lot of the unicorns we're seeing, I think it is process differences. Spotify is a process difference. How do you buy music? Klarna, how do you buy stuff on the net? Trade doubler. I mean, a lot of them are very much process innovations. Lensway as well. It used to be you went to the optician in the center of the town, got your eyes measured, came back 3 days later, picked your contact lenses up, all for 2 errands and a lot of money. Click, click, you're done. It's a lot easier. So I would think that I would look for, if I'm looking for unicorns, I'm looking for process innovation and barriers to entry.
Excellent. So you also touched on something interesting, which is the cultural differences within companies and how they operate. And this goes also to diversity within a team and within a company. So a lot of press recently has been around the diversity in Silicon Valley, San Francisco area, the companies that are later stage tech, and how their teams are not as diverse as they should be. And Kathyrn, I'd like you to start this conversation now. How important is it to have not only a male-female diversification in a team, but also the cultural diversification on the team so that they work well together, they're allowed to execute? You know, how do you look at that, and how do you feel about it?
Well, our firm, the network, invests only in women-owned and C-suite managed early-stage companies. So there must be a woman with a prominent position, and that woman, or women, plural, must have an appropriate share of the ownership of the company as well. And we do that because study after study by the biggest names around, if it's McKinsey, Dow Jones, CSFB, have produced studies that show that diversity leads to better results. We've seen it with Catalyst when it comes to the percentage of women represented on any given board. And it seems that 33% appears to be a magic number, whether it's in the senior management or the governance of any given company. And we don't believe in all women managements either. We know that the studies also show that all women is not as good as diverse. It's actually better than all men, but it is not as good as a diverse team. And so once you have a woman in the C-suite and with a significant ownership, we think that the culture of the company will be one of more inclusion and diversity because, you know, women still are the other, if you will. So there's more recognition of the other and, you know, giving opportunity to the other. To Joshua's point about diversity as well, Walter Isaacson is coming out with his book yesterday, came out with his book on the innovators. So the author of Jobs, the consummate biography on Steve Jobs, has written a book on innovation and found that innovators are not single people. So to Jane's point as well, she looks at teams, that it takes collaboration. And even the largest companies can do great on innovation if they harness what they have internally, and that means, you know, diversity by any measure that you want to call it, but also across geographies. Mm-hmm. And there have been powerful advances, even in, you know, corporate old line America, because they got innovation right, and it always involved diversity.
Viney, how do you feel about the topic coming from the standpoint of seeing a lot of earlier stage sort of student-led companies at the university level in certain situations which may not have as much diversity or experience, but how important is it for them?
I think I 100% endorse what my colleague has just mentioned, and I'm a strong believer that having a woman on the team is extremely, extremely important. Just because, simple reason, women keep you out of trouble. And, you know, I have consistently never ever made an investment decision without consulting my own wife. And every time I've tried to do things on my own, I'm talking about my personal investments, not. Every time I try to do something for myself without consulting with her, believe me, I've gone wrong. I think the women have an extremely unique, intuitive sense, which men folk don't. They have the capability of somehow foreseeing future events far more clearly than I think men have. And not only that, but they apply just simple common sense rule to most decision-making situations, which I think sometimes men don't. And I think pays very heavy dividends, in my opinion. So I, for one, I'm a very, very strong proponent of women on my team, at least, if I ever had to do anything.
Okay, so I think you're going to find that that's going to be a consistent theme amongst all of us. I'd like to talk a little bit more focused about the Sweden startups and how when they're trying to break out of Sweden to launch into the US or other European markets, what they can do to really stand out to be the best of the best, because there is a philosophy that Sweden does have, you know, great education, great platforms, great government programs, lots of angel money. So there is a really great baseline for creating companies. But how do you, you know, leap above that to show yourself to be a better company that's worthy of that next round of capital into the next growth phase? You know, what does that take us?
Well, I think let's not fool ourselves. There is nothing particularly, you know, great in the waters of Sweden that makes us better than anyone else in this regard. Actually, I would say that we have a number of things that are going for us, but a number of things that are going against us as well. When we sort of gather and talk about all the things that are so superior about ourselves, it's good to sort of lift our self-confidence, because that is a very important currency to bring to the table. But I think we should also acknowledge the fact that we do have some clear disadvantages that faces every startup. And the biggest disadvantage is that we don't have a home market. One can say that the flip side of that is that, okay, then that means that you have to think globally from day one. And that's easier said than done. You know, that's very easy. Just you know, throw that out and say that, you know, we have to think global. But what does that mean in practice? That means that you have to create a more capital-intensive startup initially in order to reach those markets, and you have to reach those markets in a way that is not as accessible as a U.S. startup. We do have some fundamental, I think, strengths. And it's that actually high-skilled engineers are relatively inexpensive coming out of Scandinavia. I think that is probably the key competitive advantage. If I were or one of my portfolio companies here in New York would go out and hire a top-level web developer or software engineer, we would probably have to pay up at least double what you do in Stockholm. And Stockholm is the hottest market by a wide margin in the Nordics. So that is a fundamental plus. The other thing that I think we need to do and think of in Sweden is that there seems to be this idea that everybody has done something phenomenally about the climate. But I would actually beg to say that we're lucky that we're here right now for several reasons. First of all, that we had a social democratic government who decided to create a subsidized computer program where everybody could buy their home PCs for pretty much for free, which meant that everyone then wanted broadband, and everyone under the age of 35 has grown up with a PC in their home. So they are totally literate. They are completely natives in that environment. And then on top of that, we have had the dot-com bubble that was pumped to a level that was probably higher than anywhere else in Europe. And then it basically came to a pretty big frightening halt as well, and even worse in Scandinavia than in most other parts of Europe. But what happened? Well, Jonas sits here on the front row. He was part of the same first wave as I was. And pretty much every one of the really successful startups, Jane, you were also part of that first bubble. We are sort of the backbone of this new thing that is happening. So we fueled a lot of capital that was wasted, but we created an ecosystem. And it has nothing to do with any government initiatives. It's luck.
Once upon a time, I grew up in the States and met a Swedish man. After a couple of months, it had become winter, and he asked me, "Can you ski?" I was a California girl. "Yes, I'm an excellent skier," I answered. And then he was somewhat taken aback. And I said, "And can you ski?" "Oh, yeah, a little." Okay. The truth of the matter was that I had been skiing a total of probably between 7 and 10 days in my life. I didn't kill myself on the green slopes, and occasionally I could make it down the red slopes without anybody screaming, including me. My husband had spent 10 days to 4 weeks a year since pretty much he could walk skiing. Who was the better skier? He was, by far. Okay? This is something that I find keeps on happening when I go between the United States and Sweden. I sold a company in the bubble. Nortel bought us. And I had some absolutely amazing engineers with me. And our new boss said, "Do you know anything about SSL? You want to do this thing with Jig we do in SSL?" And then I went and asked guys and say, "Well, yeah, we know a little. Johan knows most." Okay, right. I'd forgotten about this, right? So I go back and tell my boss, "We know a little." "Oh, then you don't get to do it because the American team is real experts." It turned out that Johan had actually been part of the standardization committee. He'd written the original code. We did get the SSL project after a while, but what a waste. So that I think that when people here are going between the United States and Sweden, you need to have a pretty thick filter. If a Swede says, "Yeah, I know a little about it," he spent 2 weeks skiing every day of his life since he was 3, or every year of his life. And if an American says, "Yeah, I'm an expert," well, then maybe 10 days total. And I think that that really makes a difference in who's good at sales and marketing. You'll find that many of the startups will be pitching later. They have their development, which requires a great amount of humility and listening to other people and just plain hard work and not thinking you're anything dropped out of the sky in Sweden. Okay? "Oh, I know a little bit, but I'm really willing to listen to anybody else's opinion because there's more to learn," right? And then you'll have the Americans saying, "Wow, we're wonderful," over here doing the marketing. It's a pretty good combination, actually.
Very good. I'd like to open up the panel to questions from the floor. I know there's entrepreneurs out there as well as angels and institutional investors. If you have any questions that we haven't addressed, now would be a good time.
Hi, I'm Tony Freedy from Vinova. There's a question that came into my mind from the last panel, the difference between the Americans and the Swedes. And it makes me wonder how you see it. It seems that in America it's okay to love money, be driven by money, to have that as your passion. But with the Swedes, that we're pretty embarrassed by it. Often quite embarrassed that we even have to ask for money for our product, for our services. Much easier just to give it away. Have you seen this? And if so, do you have any thoughts about how Swedes could maybe love money more?
So in case that everyone didn't hear it, the question really relates the differences between the American psyche and the Swedish psyche about should Swedes embrace the concept of capitalism, so money, which you are still, part of the capitalistic society, versus we really shouldn't care about the money that much. How can you change that to make it more about return or money as it is?
Hey, I'd like to do it the other way around. The most successful companies I've been involved in have split the shares equally between the founders and been quite generous to the next ones. Okay? Because in a young startup, and I remember I tend to leave when they're around 50 people, okay? When they're in the young ones, it's actually a pretty good idea that everybody feels ownership. It's everybody's baby. And I think that kind of generosity, the kind of group feeling that is, rather than having one person who owns the whole thing and cracking the whip, I think that actually makes a big difference, okay? To the positive for Sweden. Now that said, I certainly am glad to have earned as much money as I have, okay? And I'm also glad that there's a few dozen techies in the world who are also quite well off, thanks to the work we have done together, okay? There, I think the difference is, if I meet an entrepreneur who is really driven by money and not by passion for building whatever it is they want to build, I think that entrepreneur is very unlikely to succeed, and I will not invest in them.
Mm-hmm. Yeah, I would definitely echo that statement. But I think there is also another very interesting difference with Swedes and Americans when it comes to how business is run and how organizations work. And this is an advice I give all the time to my companies that have operations in both sides of the pond, is that a Swede works for a company and your boss actually doesn't mean that much to you. Whereas in the US, you work for a boss, and that boss means everything for you. That boss means whether you get promoted or a pay raise or fired. So you have a much more direct relationship to your boss here in the US, where, as opposed to in Sweden. And in Sweden, that sort of creates a lot of ambiguity also, and especially if you start mix those two, there is a lot of confusion all the time.
Next question.
Yeah, I'm just curious. My name is Carl-Johan Wallin, and I'm Swedish. And during the last panel, when we were patting ourselves on the back a bit, and we were, on the top of the lists, I was thinking about tennis, actually. And Sweden used to produce a lot of good tennis players, as I think everybody here knows. And I'm sure people were sitting in similar rooms and thinking, Sweden is a great country for producing good tennis players for reason 1, 2, and 3, and so forth. And suddenly that dried up. And when Pär-Jörgen just said there that it's luck, maybe that is the case. Maybe, to be the devil's advocate here, the few entrepreneurs that we have, how much is that actually a product of government and incentives and so forth? But that's really just a bit of a comment. But my question to the panel is, and not so much to Pär-Jörgen actually, we're comparing Swedes and American entrepreneurs. When a Swedish person knocks on your door, do you have any different expectations or presumptions? Is it a good thing to be a Swedish entrepreneur knocking on your door?
Me? I think so. There is, obviously, I have not professed that I know Sweden really well. But whatever little I know about Swedish products and Swedish entrepreneurs, and IKEA comes to me in my mind, and I'm my son, my daughter, our entire family, we are sort of virtually married to IKEA. Everything that we have in our house comes from there. It's cheap, and it's the best. I think the instant impact that a Swedish entrepreneur would make at me, for instance, would be, I think, there's a certain amount, I think, acceptance and confidence. I think there's a reliability factor, which, in my mind, plays a very important role in making my final decision. And I have not heard of very dishonest Swedish people. And I think for me, the fact that this is a reliable entrepreneur, someone who's disciplined, lives in such a cold country, still manages to use, I would say it's a very big plus for me, at least. Sometimes I've found a little bit of difficulty in the communication piece. I've dealt with maybe 3 or 4 situations, not a lot, but apart from that, I think it's a plus overall.
So we have some direct experience with this at Rubicon because we have looked deeply into several Swedish-based companies and Swedish entrepreneurs. We haven't invested in anyone yet, but it is coming. So it is a plus when we see that. There is an instant level that they get elevated to in our minds because we do understand the Swedish ecosystem. One of our general partners spent 10 years in London and so went back and forth to Stockholm a lot. We were actually in Stockholm in June of this year looking at a lot of companies. So there is a lot of positives there, but there are also some landmines there as well with regard to how Swedish companies are initially funded in Sweden in the angel perspective. So there are different cultural nuances, there are different legal nuances. So there are some things that we already know that have to be fixed or maybe just changed when they're coming over to the United States. But they definitely get a certain level of credibility instantly that we otherwise wouldn't extend to a lot of other cultures in the world. I'm not going to name those, but it is a difference. There is a difference. Does anyone else have any experience in this?
I would say the brand of Sweden when it comes to startups is fantastic. And from where I sit, I think Sweden can do even more to enhance the knowledge in the general community of how many great startups Sweden has produced. I have spent a lot of time in France in my career. France does not have a reputation for being a great startup country.
Great cheese, though.
Yet, well, great, a lot of other things, but yet France is also the home of some of the best engineering schools in the world, but it doesn't produce the entrepreneurs and the innovation and the companies like Sweden has produced. So I think Sweden has a lot to be proud of for what you've achieved. You do have that ecosystem. You have a great brand, what Viney was talking about, the reliability, that's a brand. In the United States, we understand brands. And Sweden has a great brand for that I think you can capitalize on even more.
So that's going to finish our panel. We're all going to be here, I think, for a little while longer this afternoon. If anyone wants to talk to us, certainly all of us are fairly approachable. And thank you for spending time with us today.
Great. Josh, thank you very much. Thank you to our panelists.